In yesterday's video, we saw the Wall Street Journal saying Americans are really bullish on stocks. Moving forward 24 hours, same Wall Street Journal, different story. Fears of an economic slowdown spark stock market sell-off. And we can see the major indices were down across the board. If you're turning to the news for a reason, you'll always find one, because that's what they're looking for. To sell you on the concept that they know what has actually occurred. NVIDIA suffered a record $279 billion loss in market value. And why did that occur? Because NVIDIA got a Department of Justice subpoena in an escalating antitrust probe. The markets, already worried by the Japanese carry trade, were just thinking, what is next? Asia to track the worst US sell-off since the August crash. Now, if you're reading this news, you could only subscribe to one kind of idea. Oh, I need to sell. Actually, you need to look at structure. Always remember, in the news, if it bleeds, it leads. And what's coming? From Bloomberg, global stocks tumble as flight from risk persists. Hang on a second, yesterday it was all good. What you need is a really stress-free alternative. Yeah, it's good to read the news, but don't be too influenced by it. What do we see here? Trader's way. Buy the dip opportunities amid stocks selling off. And it's not just stocks, it's crypto as well. Turning to crypto news, we can see that Bitcoin, Ethereum, BNB, Solana, XRP and TON are all down. Congratulations to John Deaton, who won the Republican U.S. Senate primary. Analysts say that a Fed rate cut could push Bitcoin down 20%. But do they know where the structural support levels are? Probably not. There's something really important that I need to show you. I'll show you just a little bit later in the video. In around 2 weeks, we're going to have the next FOMC meeting, and it's pretty historic because they're going to cut the federal funds rate for the first time. The probability of a 25 basis point decrease is 59%. The probability of a, oh my God, we messed up the economy cut of 50 basis points is now 41%. 38% it was yesterday. We had some economic data out in the past 48 hours, and that saw contraction across different economic indicators. And unfortunately, a little bit of inflation also creeping through. Turning to the main markets, we can see NVIDIA just fell 9.53%. It wiped out hundreds and hundreds of billions worth of market value. And we can see a lot of other big companies were selling off and selling off hard. That, of course, filtered into the crypto market because crypto cannot escape the stock market's gravity. In the past 24 hours, we've seen Bitcoin come down 3.48%, Ethereum nearly 4%, BNB a little over 4%, Solana is actually doing quite well, XRP, Doge, and Tron are also doing reasonably well. Why do I say that? Because they're not down as much as Bitcoin. The greatest gainers in the past 24 hours, Bitcoin, SV, Starknet, Aave, Uni, Monero, Helium, DAI, and now we're getting into the stable coins. And when you have stable coins in the list of top gainers, that means that the sell-off has been pretty severe. The greatest losers in the past 24 hours, TON and NOT, and they both hang out together. Dogs, Akash Networks, Brett, Atom, Phantom, 1000 Sats, Sats, and WorldCoin. Just a very quick piece of housekeeping. Masterclass students, I've released LV32. Do not ignore signals from the major indices. If you're inside the service, the structural levels on the S&P 500, on the VIX, on junk bonds, and the Russell 2000 have been updated as well. And probably one of the most important ones to update is actually NVIDIA. NVIDIA was also updated. NVIDIA literally shook the market. Let's have a look at the structural levels coming up and see where those safety nets are. When looking at the structural levels on NVIDIA, we can see that we pass through a negative fair value gap, or what we call in the CTKS method, negative air. We know where they start, we know where they end, we know where support is, we know how big the support is, and how minimal it is as well. We also can detect fair value gaps upwards. If you're trading or investing in NVIDIA, you can expect a little bit of follow through. It may kick up, but then if it returns to the downward path, you will find support between 100 and 103 as well as 96 to 98.60. It's important to understand the intercorrelations and interdependence between a variety of different charts. Here we're looking at junk bonds. Junk bonds gives us a risk on or risk off indicator. Right now, it's severely risk off because we've seen junk bonds just crater recently. But the real key is where is structural support, or at least where's the next level. And I just wanted to show you this blue line. What you can see, that blue line is Bitcoin. But if I was to put the S&P 500 or the NASDAQ or the Russell, it would be quite similar. Just to prove it to you, here's the Russell 2000 index in white. We generally represent the stock market indices as white lines, and blue is crypto. This is why inside the masterclass, I thought it would be a really good idea to give you a bit of a signal on the Russell 2000. But the key here, if junk bonds continue their descent downwards, we would expect crypto and the stock market to follow. It's very important to understand the intercorrelation between the Tier 1, Tier 2 and Tier 3 charts. That is, if you want to make money or avoid serious losses. Just looking really quickly at the structural levels, we've hit a structural support level just at the current price on junk bonds. We have another one further down, but we have a lot of structural support from the 93.64 up to the 94.20 mark. That means we could get some negative fair value gaps or negative air, and they could be filled very quickly, just as this one did. And of course, if you're inside the service and you have access to the indicators, you already know all of this. At times like this, it's vitally important you know where price can sell down without much structural support. If there's no structural support, for example, if the structural support level wasn't there, this would become a negative fair value gap all the way down, and it could overshoot it. Now, what typically happens when we come down to thick areas of structural support, we expect a bounce, because that's where all the longs are getting liquidated, and of course, then the sellers close out their positions. Unfortunately, inside all financial markets, we tend to get two camps, the always positive camp and the always negative camp. We're not like that at all. We're the always realistic camp. We know the price is simply going from structural support levels to structural resistance levels. And if it's making higher highs and higher lows, it's in an uptrend. And sometimes it moves from structure down to structure, from structural support down to a lower area of structural support. You get a flipping of structural support into structural resistance. So this is how financial markets work. They're always going up or down this way. There are unlimited opportunities inside financial markets, but you must be aware of how to capitalize on them. The first critical point is to just understand that everything is intercorrelated and interconnected. When we look at the Dow Jones, its correlation and Bitcoin's is pretty spot on. What about the Russell 2000? Yeah, it's pretty good. And if you get big sell-offs inside the market, you will see all asset classes, and I mean all, start to nosedive. Therefore, we need to look a little bit into the future and just determine where things could be going next. Typically, September and October tend to be rather negative months, but the rally into the end of the year is pretty phenomenal in that case. And in presidential election years, and that's of course what we're in right now, we can see up to election day things are pretty negative because people are trying to figure out what the heck is going on, who's going to get in, and of course everybody thinks that the other party, if they get in, that will be the absolute end of the world. However, when the uncertainty leaves the markets, we tend to get a pretty big rally, and it's often called the Santa Claus rally. So just be aware of this. These are all buying opportunities, but don't seek to buy the bottom. The greatest traders and investors, they all of course read the news, but they don't let the news make their buying and selling decisions. They let something else make it, and that is primarily structure. We can see as the stock markets open and Tokyo just sold off like hell. We had this pretty much of a hell candle, and it's since recovered slightly. It's really interesting that in the UK session they bid the price up. UK doesn't usually do that. It likes to dump. The real question is, what will the US market do? Will they say, "Oh, that's all oversold. I'm going to buy the dip and up we go"? Or are they going to get panicked and just listen to the mainstream media news and sell like hell? Please let me know in the comments, what do you think is the perception inside the market at the current time? From a structural perspective, we can see that we lost this quite important level just below 58,000. This particular level was important for us to convert into structural support. We were almost doing it, but it started to break down. Now, what does that mean? Negative fair value gap, too much momentum, and another negative fair value gap. We had some slowing down here, but the reversal was around 56,000. You might remember in yesterday's video, I said that I was preparing for around the $57,000 mark. This is when it was 60,000. The reason and logic behind that, it had nothing to do with NVIDIA. It just had to do with a potential weakening of structural support levels. It is vitally important that we hold on to around this 56,000 area. If we start to drop below that, please refer, if you're inside the service, to the negative fair value gaps that exist below. It is quite extreme, and you will need to prepare. If you're a little bit confused as to what gold is doing, it lost the 2494 structural once support now resistance level, and it had quite a negative fair value gap in it. It's very important to know where your structure is. If you don't know where the structure is, and there's some deeper structure in here, that's a little bit difficult to see. Often just popping a rectangle on will just reveal where this structure is. And you can see that we've come down to that structure and bounced. What was responsible for this sell-off? Of course it was the junk bonds coming down, but it's a little bit more than that. Gold and silver react to real yields. If real yields are going the wrong way, guess what? Gold and silver are saying, heck, I'm out of here. And that 50 basis point probability being put on as a potential rate cut just sent gold trailing itself down. However, just keep in mind, every single chart is intercorrelated and interconnected to the chart that you're viewing as well. It's pretty mind-bending stuff, but it's actually correct, especially the Tier 1, Tier 2, and Tier 3 charts. In the next 24 hours, I'm going to close off this partial masterclass scholarship, which was very kindly donated by Joe. Thank you, Joe. And if you're interested in becoming an awardee of this partial scholarship, please make sure that you reach out to me in the next 24 hours. Personally, the way I'm handling everything, it's just an ideal opportunity to get in and stack your sats and to pick up such incredible bargains. This is nothing to be feared, just something to be prepared for. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.